So this is a pretty straightforward one here, guys. I'm going to show you what is my favorite quote-unquote smart money concepts sort of setup. I call this the fake out breakout. And really, it's a pretty straightforward one to sort of see and be able to find. And I'm going to explain it here to you in a moment. But basically, what we're looking for to find this sort of setup is this move right here. Okay, so we know that we're on an overall downtrend, okay, and it's pretty much, down it comes, backs up, tests, back down, up, tests again, down we go, testing, testing, down, 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 okay? So after this big drop, we've got, a pretty significant consolidation here, but still on the way down. We're on the 4-hour timeline. This shows up on a lot more than just the 4-hour, but I like to utilize it for swing trades purely because I don't know, it just sets up better for me in that way. I'm comfortable with that. I have SMAs on my screen right now, but those aren't necessarily any needed anything right now for this kind of setup. This is not really based on price action. Sort of the fake out breakout or the loss lead, and what we're looking for, right, is when we have a downtrend that's existing, okay, and we see it pattern, right? This is a little hard to see. Sorry, it's stretch it out to get a little better idea that we've got a buy and sell pattern existing right here, right? These are decent little opportunities themselves to catch a bunch of pips in this area, right? And say you're just sort of like intradaying these moves, and you grab this buy and it breaks up through and up to here, like that's a great move on a 4-hour, 2-day run right here. So what we're looking for is this sort of structure, this pattern, right? We want to see the peak, the breakdown, and then, the usual, breakdown, super tight pattern like that, and then the breakout, okay? Huge drop, consolidation, breakout. The reason why we got in, okay, is not because of anything to do with necessarily price action. Obviously on the 4-hour, this wick right here, not a bad entry to sell, just to potentially get back to what might be a retest of this breakout, which is basically what you see it doing now. This is CAD JPY on the 4-hour. If you want to take a look at it, you'll see this is not doctored or any of that kind of stuff. That's the actual chart. So here's what I did. See this big drop happen, watching it, comes up and breaks through, and this is where we want to pull out our Fibonacci. So this is a trade mainly based off the Fibonacci. There's a lot of different confirmations here in order for us to want to take the trade, other than just the pure price action, other than we know that we're at a previous order block, all those other kind of things. I did this one purely on the Fibonacci retracement, right? And, it's not exactly perfect. Say I bring this up like another little extra hair here to actually touch like so, and you'll see it's kind of ridiculous. We're looking at basically right to the T on the 50, right? So on my fib, I have everything deleted except for the 1, the 0, the 61, and the 50. So the 0.61 and the 0.5. That's considered the golden zone in here. You'll see a lot of buying and selling opportunities exist sort of in this area once you learn how to utilize the Fibonacci. Some people live and die by this. They say that the charts react due to the Fibonacci, and in some cases it seems that is definitely true. But as we know with trading, even being right half the time, if you risk appropriately, will mean you're a profitable trader. This is the setup, guys. Keep an eye out for these things, okay? So we know we have our downtrend started, okay? Comes up, breaks down, we got our lower low, our lower high, and then down we go. Obviously, ultimate position on this is right here. Don't always catch those. So looking for an opportunity to get back into this trade during the downtrend, because realistically, if we really zoom out, we're a pretty big buy up right here, but as we see, there's always some sort of correction. So this came up, and support and resistance would have said, oh my god, it's got to go way up here, but it didn't. Comes back down. It's our first little area of consolidation. It's consolidating it right now. My first TP is the bottom. I want to see it come back down and clear that wick at the very bottom. Oh, no ads on any chart. Shit. I don't pay for TradingView. I don't need to. So what we're looking for basically is TP1 being right in here. And then honestly, what you'll see happen a lot of time is let's just continue that downtrend down, right? So it's going to hit TP1 is ideal. I honestly think we're going to see it probably actually come down into this area in here and then come back up, retest this zone here, and then continue down all the way back down to clearing out the bottom of these wicks in this area. Maybe right in here is a really good TP. Why? Because we have the change in trend happening there, comes back down up there. We're in this price area, but below it obviously, but straight back up, down here again, and then a huge return. So I think it's likely that we'll at least catch this TP here. I'm obviously already in it for quite a handful of pips to start with here, so that's always nice too. But big 4-hour price action swing here, where we're waiting for the fake out breakout, because this just collects a whole bunch of orders, right? Pressure, selling pressure all day on this, big selling pressure. Comes back up to loss lead. People get in for buys here, buys here, buys here, and then the bottom comes out. Happens all the time. This is my favorite quote-unquote smart money concepts sort of trade setup. I had almost like no drawdown on this trade, and you're in on a great, like I've said in a lot of my other videos, like, if you're not comfortable with the entry that you have on a trade, don't take that trade. Like, my big thing is I struggle with drawdowns, especially when I use larger lot sizes, right? Because no one likes to see those red numbers, but something I can certainly work on, and I think everyone can. But my way to combat that, I guess, and to try to not deal with it really as much as possible is just all about solid entries and not having the the necessary need to get in on a move just because it's going in a certain direction and hold, which you certainly can do sometimes, right? You take a sell anywhere in here and hold that, and you're in profit. But entry's everything, and when you see this sort of setup, you'll realize you got a pretty good looking entry, on your hands. At this point, I'm shooting for the bottom here. I'm probably going to take partials pretty soon. We might see another mini version of this occur, right? Another little pop up and then down again. So we'll see, but this is what you're looking for. You don't need the SMAs at all. Don't need those. You find yourself this pattern. Okay, number one, we have a downtrend. It's been in some sort of consolidation. We have a drop and a breakdown. We've got this maneuver here. Okay, this is what we want to see. Some consolidation. The pattern is getting tight, and then we have a breakout to the upside. Okay, and then we're looking for it to come back to previous buy and sell zones. So the 50 is basically the beginning of this previous order block here, where there's a bunch of orders right in this area, and the 61 is literally in the middle of it. So I was waiting for it to hit the 61. I thought we were going to have that, but it came up to the 50, had a rejection wick literally touch it, and then I got in for the sell. So really easy. This is not a hard pattern to find. You're going to see it often, and when you do, take advantage of it. But you're looking for the downtrend, and then the breakout back up to clear 50% of the move, and then back down. Works for a lot of pairs. You'll see this a lot, guys. So pay attention to it. Do your best to try and memorize it, and you can catch 20, 30, 40, 50 pips pretty consistently with it. So it doesn't always work, obviously, and there is people who will get in at the bottom here of this little move, right? And then they're just going to put their stop losses up above and take the sell down. I waited. I try to be as patient as I possibly can. So that's a nice little smart money concepts, Fibonacci, sort of retracement tool. I call it the fake out of the breakout, or the breakout fake out, or whatever you want to call it, but it's a good one. And if you guys have questions, feel free to, toss them up in the comments. Please read the description. There's information in there on how to reach out to me directly and get a hold of me. I got a bunch of groups, where we're discussing trading live all day long. So feel free to come and join us if you want to learn some stuff, or if you think you got something that you could possibly teach me too. So appreciate it, guys. As always, like, subscribe, comment. Gonna do my best to try and get out some more of these videos over the winter here, now that I have a lot more time on my hands. With some basics of how to trade the Forex market, and honestly, how to simplify it to a degree in which it's approachable. There are certain strategies and setups that keep it simple, and if you just stick to those and those only, your win rate will drastically change, and you can start working on becoming a profitable trader. So I hope you guys enjoyed. Thank you so much.